We've talked already about the animal spirits. We've seen it across the board, whether it's surveys or individual consumers, industries like housing and manufacturing, and small businesses. Does the stock market rally argue or as a harbinger of great things to come, or is this some sort of euphoric thing we should be worried about?
Well, look, it's exciting. I do think it's a read on what's going to happen, and I think that people are understanding that Trump is going to deregulate, he's going to cut taxes, he's certainly going to create this fiscal stimulus and maybe adjust the monetary policy somewhat. And so you've got money now that's coming from overseas. It's not just U.S. investors. They recognize there's going to be growth. The actual retail investor sees jobs going to be improving, wages improving, the economy getting better. I think that this will continue until there's some evidence that perhaps China and other countries could slow it down. And there is a chance there, and that would be because they don't get with the same kind of fiscal changes that Trump is doing himself.
Although I got to tell you guys, I think China's going to actually be forced to do things and try to match us. Maybe not dollar for dollar, but certainly in intensity with their bid. Tim, let me ask you, the Americans for Prosperity, how are you feeling so far with the way Donald Trump has composed the composition of his cabinet and the ability of them, along with the GOP Congress, to put through, as Eric was talking about, to put through the policies needed to justify this rally?
So far, so good. Attorney General Scott Pruitt from Oklahoma at the Environmental Protection Agency hopefully will bring some common sense environmental policies rather than the genuinely nutty leftist stuff that the Obama administration's done. That'll create job growth, get the energy sector going even faster, even better. Tom Price, congressman from Georgia at HHS, Health and Human Services, he's going to lead the effort to roll back and repeal Obamacare. That's been a job killer and a real crimp on the economy for a long time. These have been good appointments.
Talking about the first 100 days.
Yeah.
What's a must? What's a must for the first 100 days to not only keep this rally going, but these animal spirits, which obviously have come to life here recently?
Repeal Obamacare. Get it done. Don't do a 3 or 4 year deal. Get it done now. And secondly, genuinely, completely reverse, roll back these nutty environmental policies that Obama put in. And third, tax reform. Charles, imagine what big, significant, lower, flatter rates on the corporate side, individual side. Imagine what that would do for the economy. So tax reform number 3.
Getting to keep more of the money that we earn. That would be an amazing thing.
Absolutely.
And by the way, hey, government, it's our money first. It's not your money. You're not giving us anything. Oliver, you're the stock market expert here. Obviously, a lot of folks are saying we've got $1.6 trillion in market value added to the U.S. stock market since the election of Donald Trump. We're approaching $24 trillion in valuation. Some are saying that ratio is way out of whack or come way too far, way too fast. What would you say?
Well, I don't think it's way out of whack. It's slightly elevated. There's no question about it. Valuations are somewhat stretched, and so it comes down to earnings. If you're going to see strong fourth quarter earnings season that's going to start in a couple of weeks here, then it's perfectly justified because the expectation is that fiscal policy is going to increase growth, is going to increase wages and therefore spending. So I don't think that it's crazy valuations. The big question is, and the concern to kind of put a little bit of a damper on expectations is, so far you've had 72 companies in the S&P 500 give negative guidance. That's roughly double the rate that typically is at this point in time prior to earnings season.
You think of a guidance for the current quarter or for next year?
For the current quarter, for fourth quarter earnings. So, you know, you want to be a little bit careful there. Now, having said that, I think that the Trump policies that he's suggesting are going to be strong enough to combat a lot of that, and so a 2% earnings growth rate is going to be just fine for the market. The real big question is, you know, what happens not in the first 100 days, but in the first 200 or 220 days, and when economic and political realities hit the Trump administration, and we find out whether negotiating in business, which he's clearly very good at, can amount to being a good politician and a good diplomat.
Right.